Nearly 90% of S&P 500 companies have topped consensus earnings per share estimates. This is the highest it's been in the last 20 quarters. So, question to the group. Why do you think companies are beating earnings at record high rates? And what's one company that you follow that beat their earnings this quarter and why? Toby, what you got for us?
Well, I think part of this has to do with perhaps consumer spending, consumer demand being higher than people anticipated. I think a lot of people, a lot of analysts, even a lot of companies with their guidance, perhaps, were being a little cautious going into this year because we weren't quite sure what it was going to look like, right? We weren't quite sure what coronavirus would do. We weren't quite sure what the reopening would look like. We didn't know what that would mean for consumer habits and how people would spend their money. As it turns out, people actually do have a lot of cash on hand, it seems. They're ready to spend it. They're making up for lost time. And I think the labor shortage is putting pressure on wages too. So that might be helping with spending. It's putting more money in people's pockets. You talk about a specific company, Bumble, which is makes a dating app, online dating app, sort of similar to Match Group and stuff they got going on, but a little bit of a different focus. Newly public. In their first public quarter, which I think they announced earnings a couple weeks ago. We talked about this, maybe 2 weeks ago. They beat expectations. People out there having fun, maybe been locked up for a year and want to get out dating more. I don't know. The beat wasn't huge, so I think this might just be that issue of people, analysts being a little more cautious, especially with a new company, not quite sure what to expect. But yeah, good job from them.
Yeah, I agree with what Toby said. I think there's sort of a combination of uncertainty, about the recovery from the pandemic, and investors and analysts are sort of in the dark here. We're looking at, if you want to, usually you compare a year over year performance. Q2 was last year was sort of a disaster with the lockdowns and stuff. So I think there's that factor. I think consumers have cash, like Toby said. We had the stimulus in March, so spending has been up. Second quarter was really the first time that people got to go, be out and about. With getting the vaccine and all that. We saw a strong performance in discretionary categories like restaurants, apparel, and travel. Certainly relative to pandemic levels. And I think, one company that was topped estimates was worth noting is Facebook, which I think is kind of a barometer for, the overall health of the consumer and, small businesses, because, that's most of their customer base is, small, medium-sized businesses spending on ads on the platform. They had revenue up 56% to 29.1 billion. That'd be 27 estimates, 27.8 billion. Earnings per share doubled, also beat estimates. And, so that, to me, that is sort of a sign that businesses they count on are really, getting back to spending on ads and trying to get those customers back in the door.
Yeah, that's certainly a great forward-looking, trend that companies are coming back. I know that the Trade Desk also saw some bounce back in the most recent quarter as companies are sort of loosening their purse strings, as retail and people get out, retail opens up and people get out. So I'm thinking that part of the reason that companies are hitting their earnings at sort of above consensus estimates is management had to be conservative coming into this quarter in predicting how their business was going to do. And the factoid that I shared with you, it's all about earnings. So not only is it, revenue, but, potentially companies were holding back on spending, came out faster than we expected. And since they were holding back on expenses, a lot of that upside dropped to the bottom line. So, certainly a positive thing. And, you guys talked about sort of pent up demand and people getting out. I think this is a bit of a one-time thing and may not continue. We're seeing, we've talked a little bit about on the show about supply chain disruptions and its ability to potentially even to extend into the holiday season. So, this could possibly turn the other way in a few months, just my crazy prediction. But a company who has beat earnings coming into the quarter was Atlassian, ticker symbol TEAM. This is one of my favorites that I talk about. They're a cloud software company focused on team-based collaborative platforms and getting coworkers to work together in lots of different software modules to make that happen. And it shows me that their land and expand strategy is working, and their sticky ecosystem is still sticky. So one of the big things that Atlassian's going through right now is they're moving customers who are on premise, have bought their product in the past and have installed it on premise, and they're moving over to the cloud. And so, the Atlassian management put the predictions together expecting, as they did this transition, that they would lose some portion of their customers. So it's possible that they aren't losing customers at the rate they predicted. And, that's certainly very positive. And Atlassian got a big tick up I think it was 20% plus the day after earnings were announced. So I still think these guys got a long way to go, and excited about them continue to be excited about them as a company.